Hi everybody, I'm back with a great analogy I'd like to share and also explain why I think you cannot afford not to invest. Have you ever wanted to own part of a company but not have to do any work to reap the rewards? I'm here to show you how. The answer to this question may be simpler than you think. It is called dividend investing. With this style of investing, you buy a small portion of the company when you buy a share, and in return, they share with you a small percentage of the profits. So you essentially receive a payment for doing nothing. These payments can range in percentage. They can range anywhere from 0 to 14%. However, it's best to look for somewhere in the middle. If it's too low, you may not beat inflation. However, if it's too high, you are at risk of the company potentially cutting their dividend. This has happened with companies such as BP and Shell during the latest coronavirus pandemic. Both companies slashed their payouts by 50% and 60% as a result. In order to protect yourself from possible dividend cuts, it is best to seek out dividend-paying companies that pay less than 70% of their profits to shareholders. You may often find that engineering companies tend to pay lower dividends. This is because they need to reinvest their profits into research and development to remain competitive within the market. For higher dividends, it is best to seek other areas. On to my analogy. I like to think of each pound you earn as a small worker going off to work for you. When you earn a pound, if you spend it, it is gone forever and you have to earn another. However, if you set one off working for you, it can bring in returns. You build up enough of these and you have a small army of workers working for you even while you sleep. I have an example of the way I look at the financial side of this. If you were to earn 200 and invest it, at a return of 6%, which is quite an easy return to achieve, you would essentially, your workers would be earning for you £12 per year. This is essentially £1 a month for doing nothing at all. Companies like to pay these payments over a different timescale. Some of them every month you can even find. However, most will be between 2 and 4 times a year, either representing half year, full year, or you can either have first, second, third and fourth quarter payments from dividends. Another key perception I feel I'd like to share is I see this as taking your pension today. You do not have to wait until you are 57 for private or 67 for state. You are literally taking a pension from day one. You can choose to reinvest this payout, or you can simply keep the money and do what you like with it. And on to why I think you literally cannot afford not to invest. Following the coronavirus pandemic, there will be 5 years of increased inflation in order to recover national debt. This, mixed with income tax frozen for the next 5 years too, puts a lot of people into higher paying tax and will erode your savings. This realization pulled me into dividend investing, as even through tough economic times, if you pick the right stocks, you will continue to receive payments regardless of the market conditions. You can essentially also reinvest these dividends and buy in the dip if there is a market dip or a recession ahead. Finally, I'd like to point out that I am not a financial investor, just a person who does this as a hobby and sharing my personal views and experience. This is not investment advice. Thanks for listening. I hope this analogy helps you as much as it has helped me over the last year. Please like and subscribe if you have found this video interesting or useful.